Amazon Web Services joins the nuclear club, investing millions to develop reactors to power artificial intelligence. Plus, the boss of Accor tells the BBC that Chinese travelers are still not spending big. Hi there, I'm Steve Lyon. Welcome to Business Today. Amazon has announced significant investments in nuclear power on Wednesday. The company joins other tech giants, including Google, in turning to atomic energy to meet the power demands of cloud computing and AI. Our North America business correspondent, Ritika Gupta, has all the details from New York.
Amazon has signed 3 agreements to support the development of small modular reactors, or SMRs. These are more compact, cheaper, and potentially easier to deploy than traditional nuclear reactors. AWS, Amazon's subsidiary in cloud computing, has a massive and increasing need for clean energy as it expands its services into generative AI. It's also a part of the company's path to net zero carbon emissions. Amazon is leading a $500 million funding round for X-Energy Reactor, a company that develops SMRs and fuel. It's also working with utilities in Washington State and Virginia on potential SMR projects. The announcement is yet another example of the growing partnerships between tech companies and nuclear energy. Google recently signed a deal with Kairos Power, while Microsoft plans to use power from the restarted 3 Mile Island facility. According to Goldman Sachs, data center power demand is expected to grow 160% by 2030, with 19% of that demand coming from AI by 2028.
There's quite a bit going on in the aviation industry. Airbus has announced it's laying off up to 2,500 workers from its defense and space division. The firm said the redundancies were part of a restructuring plan as they try to bring down costs. The head of Airbus's defense and space division, Michael Schulhorn, said a leaner and more competitive approach to business was needed. Meanwhile, Airbus's rival Boeing has been facing a lot of headwinds. The plane maker is looking to raise up to $35 billion, while at the same time dealing with industrial action by more than 30,000 workers. The company also plans to lay off around 17,000 workers from next month. Despite those efforts to reduce costs, aviation analyst Mark Martin isn't convinced about Boeing and that they'll be able to turn things around.
These are second or third generation workers, Steve. They've seen Boeing in the 70s and 80s. And it's not just the pay that they're talking about. The reason why they're not coming on the table is they want better work quality standards, they want better safety standards, and they want greater accountability with Boeing. Because they've said very clearly the contract has got to have accountability. And Boeing is not willing to commit. Now, if you're going to get rid of them, Steve, where are you going to get your people from? Because we know how unions work. The word's going to travel spread like wildfire, and nobody's going to join Boeing. Boeing, thankfully, well, I'm not sure how good or bad it is, but there are no takers for the 737 MAX. Their deliveries are delayed on the 777X. They really don't have a value proposition on the market except for the much hyped about 797, which is going to come out in about 24 months from now. So I mean, it sounds almost as if Boeing is on the verge of closure, and it's going to be extremely unfortunate because as much as we talk about this and highlight the risks, we need a revival at Boeing because the market cannot be driven by Airbus. We can't have a monopoly in air transport, or this changes geopolitical aerospace dynamics and COMAC comes into the forefront with the 919 and some of the leading Chinese aircraft makers into the market. So it's we're on the cusp of a complete whole new revival and revolution. So I'd like to be a little positive about this. I'd like to see a stronger Boeing, but it doesn't seem likely.
In other news, workers at a Samsung electronics factory in the southern Indian state of Tamil Nadu have called off a month-long strike. According to the union leading the protests, Samsung management has now decided to engage with workers on all key demands like higher wages, medical insurance, and better facilities. Around 1,500 workers in the city had participated in the strike, which was one of the largest the South Korean technology giant had seen in recent years. Now, turning to China, where the markets are trading higher today, it's a big week for the world's #2 economy, with the latest quarterly growth numbers due on Friday. As we've been reporting, the government in Beijing has been busy rolling out measures they hope will turbocharge growth in the world's second largest economy. Now, for a summary and to find out if they will work, here's our business reporter, Katie Silver.
How do you solve a problem like China's economy? After decades of rapid expansion, China's growth has slowed, and its recovery after the pandemic hasn't been what many would have hoped. Businesses and local governments are riddled with high levels of debt, raising questions about stability. And of course, there's that ongoing real estate crisis with defaults among property developers. Now, all of this means that they have never been more reliant on exports or making money by selling their goods abroad. But in something of a perfect storm, it comes as China's trade spats deepen with the US and the European Union.
As the G7 countries push back with anti-dumping duties, even countervailing duties, that's going to put downward pressure on the growth numbers in China.
This, among other concerns, led the government earlier this year to leverage their bets and say their growth target would be around 5% of the country's gross domestic product. That around is certainly a good way of getting some wriggle room. Last quarter, it came in at 4.7%, and many economists had predicted this quarter would be about the same. But in China, just in the last few weeks, there have been big changes. The government has announced a raft of measures to boost growth, from spending tens of billions of dollars to reducing a few different key interest rates to issuing almost $1/3 trillion in government bonds. The moves are about trying to encourage people to get out and spend money. But the devil is in the detail, and so far, investors say detail is lacking, seeing an early boost to the stock market retreat after the Golden Week holiday.
We simply don't know how big these new supports will be. We don't know when they'll be implemented. We don't know how they'll be implemented. And for a lot of investors, that really did leave them wanting more.
There are fears that even with this latest pop of stimulus, China could miss that around 5% target. So how is the government tracking? Stay tuned. We'll find out on Friday.
Yeah, we will bring you that on Friday, as Katie's mentioned there. Now, 2024 appears to be the year of business travel, with spending set to reach $1.5 trillion. That's higher than pre-pandemic levels, according to a new report by the World Travel and Tourism Council. But according to the chief executive of Accor, one of the largest hospitality companies in the world, Chinese tourists are still not spending big.
China is actually good outside, so people traveling outside of China. China domestic is still pretty slow. Very strong in the Middle East, very strong in Indonesia, and extremely strong in Southeast Asia, so Thailand, Laos, Cambodia, Vietnam. Still very robust in South America, decelerating in Western Europe, coming back in America. So it's very diverse in terms of geography. But I guess overall, it is a plus 5% demand market, where supply is growing probably less than 2%. And that's going to remain the case for the next 20 years. This is one of those things about travel and tourism. It's all linked to two factors: demography, which is actually rising, and emerging middle classes, which is also rising. If you have those two going in your favor, you're going to have pretty rosy days in front of us for the next 20 years.
Yeah, and just to spend a bit more time on China, we know that their economy's been struggling. Have you seen that reflected?
Well, it's reflecting on domestic travel in China, or domestic tourism, which is kind of actually negative for the last 6 months. Probably going to remain negative for the next 3 months. We expected it. The one thing which is striking is you have actually a greater demand from Chinese going outside. The saving rates in China has never been so high. So people do have money to spend, but they're spending outside of China.
Now, we did have a guest talking about Boeing earlier. I just want to get your quick take on how the aviation industry is perhaps impacting hospitality, if in fact those sentiments have been felt.
So far, we haven't seen anything, Steve, on basically Boeing kind of actually a debacle. That being said, we are depending quite a bit on flight capacity and airline actually running. I'm a great believer that I guess Boeing is going to be back on its feet. We have two great companies, Airbus and Boeing. They know what they have to do, and they're going to make it. So that dependency is going to be okay. And then you have the new airline, like Indigo Airline in India and Comac in America.
Now, we know that we know the numbers, we've been talking about numbers that have improved and recovered from the pandemic, which, something we don't want to be thinking about going forward for sure. But just, lessons learned from that about, how the hospitality industry has evolved since then?
Yeah, lessons learned. First asset we have, human capital. Protect your people. They've been going through the pandemic. It was tough. People should not forget about it. So protect your executive, retain your talents, search for new talents. We're all depending on human capital interaction, which is why I love my business. It's just people discover the world because they meet somebody different. 2, control the controllables. If you're going through the storm, you'd better have your hands basically on the wheels and make sure you know where you're going, even though it could be rough. 3, probably navigate through different continents. So the one thing we've learned about the last probably 3 years is you have some hiccups in Ukraine, Russia, Israel, Gaza. It's stormy, it's muddy water. You need to navigate and avoid the storm and go to other continents while remaining when you have debacles. So navigate actually and avoid the headwind.
Now, before we go, some news of a potential tie-up. Uber has reportedly explored a possible bid for travel booking website Expedia. According to the Financial Times, Uber has been in discussions in recent months over a potential acquisition of and how it could be structured. Uber has yet to confirm the news, but if true, this deal could be the largest ever for the ride-hailing giant. And that's it for this edition of Business Today. Thanks for watching, and I'll see you again soon.
Hey, I'm Ben, and this is The Catch Up. Tonight, driving test delays, peanut bans on planes, and pandas. But first, England has a new manager. Thomas Tuchel says he's very excited and honoured to be the new head coach.
I just had the chance to read a quote from Pelé in the building in Wembley, who said that Wembley is the heart, the capital, and the cathedral of football, and I think he was absolutely right.
Some other stories now. Have you had to wait months or drive hundreds of miles to take your driving test? Well, that's what MPs have been talking about this week. They're trying to resolve the issue. The DVSA, who do the tests, say they're trying to buy back leave from examiners and recruit more of them to get it sorted. New research suggests that nut bans do little to help allergic passengers on planes. Experts say that passengers shouldn't be worried about food being transmitted in the air, but that cleaning their seat with a wet wipe could be the best way to prevent an allergic reaction mid-flight. And the Victoria's Secret show has returned 5 years after it was cancelled because of low ratings and criticism that it was sexist and lacked diversity. This year's show promised to celebrate all women, with 25 different countries represented, as well as plus-sized and transgender models. And time now for 10 seconds of pandas. Bao Li and King Bao have arrived from China at the Smithsonian National Zoo in Washington, D.C., where they will live for the next 10 years as part of the two countries' panda diplomacy. Adorable. Right, you're all caught up. Have a good night.